Hey, this is June from Turning Point Life Investment, and this is your market analysis for May 22nd, 2010. Okay, let's start with the SPY 6-month daily view. Quite the volatile week. We managed to come back and retest this support area, this Thursday's low, and also not to mention that we also retested the February low of earlier this year. So 105 is definitely that strong support level, and it's going to be a support level that I'll be watching for. If it breaks, then we know something bigger is in the works and we can probably get a deeper sell-off. But you can see on Friday we produced a pretty decent large white candlestick. Anytime you get a gap down and we close above or almost completely erasing whatever happened the day before, then that's actually a pretty bullish sign, and they call this a bullish engulfing pattern. But the main thing with these patterns is that we want to see some kind of follow through. We want to see a trade above Friday's high. And that's a better confirmation that we can experience a relief rally coming next week. So if that is the case, what's a good target then? Let's go into an hourly view to get a better clue. Now if you look at the hourly prices, you can see that we have a potential inverse head and shoulder that's forming. We have a left shoulder, we have the head, and then we have the right shoulder. Now the neckline is the main thing. We want to make sure we break this neckline, and I'm just going to roughly estimate it that it's going to be around 109. What I usually like to do as far as target projection is take the bottom of this inverse head and shoulder, take the neckline, and calculate just how high this head and shoulder is, and that's about a 3-point height. And what I like to do as far as projection is add that 3 points on top of that neckline, so that will give us a 112 as a possible projection point. And that also makes sense from a technical point of view, because 112 was support here. It broke through it and it came, and usually it can come back and act as resistance. Not to mention, this is also where the top of this gap is, and I've mentioned before that gaps always make for great support and resistance. In this case, it makes for great resistance. Now if it's any more bullish, then 115 will be the next level that I will aim for if we do get this relief rally. Okay, let's go into the VIX. The VIX is telling us that it's kind of stalling right here. We pretty much went parabolic, and anytime you get parabolic or get very far away from the moving averages, that's almost a sign of exhaustion. And on Friday we produced pretty much the opposite of the market. We produced a bearish engulfing pattern on the VIX. So when the volatility drops, that's usually somewhat of a bullish sign for the market. So if we see some kind of break underneath Friday's low, then that tells us the volatility is slowing down a bit, and that usually can deflate option premium. So be mindful of that if you're, let's say, you bought some calls to play this bounce.